Welcome to stockmarketfunding.com. SMF Pro Traders are in heat right now, and the heat that they got is they got this 550 call that was bought wholesale on Friday, and they got limit orders out to sell at 11.5. That's a $3 bump on 50 contracts at the $15,000 opening sell. As I covered the Google series last week, calling it the trade of the week, is that Google went into a 60-minute buy signal, which is moving average convergence divergence, and the numbers have been improving. The base is down here below. The 60-minute buy signal is that any pullback is when you start selling them. Okay, I got executed so far on 10 contracts. Hey, you've been given a gift. I'm going to be showing the opening bell. Here's the logo, stockmarketfunding.com. I'm going to take the logo off because it's freezing my computer up for some odd reason. I'm froze up, people. Take a look at the contracts, the high of the day. If you're in denial, the high, when I said sell at 1160, there is the high to the penny. So basically, as we exit these contracts before the market even opened, they close at 850. I gave them a spread on the way out, 1160. Some of them got triggered. Not everyone, because there was only 10 that went off. There's 102 traded, and we got some other people that are coming out at 11. All right, for the people that are not in that trade, we are selling that trade. There was a huge profit. It hit right to the penny. So for the new people that are here, I didn't tell you after the fact. I told you before the fact. Because after the fact, if you're looking for that, then my suggestion is you go to one of these people out here that are on TV or anyone else out here. They always like to talk about something after the fact. 1160 was the high of the contract. Okay? Okay. Let me explain something about this Google trade on a 60-minute chart. That's an opening gap. And gaps are to be sold. Market makers will sell gaps and pull them back. The thing about it is, it's the first big gap that Google has had in a long time. And we called that trade on Friday. And the thing about it is that that gap in its entirety was $7 almost, a little shy of $7 gap, okay? And since Google has been in its downtrend, which technically, unfortunately, Google's still in a downtrend, what you're going to do is that we master these buys and these sells. And basically last week, during the options expiration week, I could only let people intraday trade them. And we did it for 3 weeks, and we have those live trades on our video site. Go to stockmarketfunding.com, join the online trading community, click on the YouTube tab. Once again, I couldn't let people hold overnight, but I could let people hold Friday on that March call. Okay? And basically, we're going to pull back, and I'm going to give traders that are ringing the cash register, I'm going to give new limit orders for right now on this trade. And right now, I'm going to tell them to put their limit order out at $8.80. The high was $11.60. Okay? We're going to see how we hold the gap, but we're going to get back below the floor and see sometime intraday today. Google has, let me show people on a 3-minute chart. Google has started in what we call a 3-minute buy signal. That's number one. Number two is that opening gap created a short-term overbought scenario. There's the close. There's the gap sequence. There's a mathematical formula that we have that I developed for gaps. So basically, you're going to pull back here. Market's only been open 4 minutes. That's it. And traders were selling into that strength. You're going to pull back, and I gave orders back out at 880 on the move. Selling in at 11, and one guy got popped out at 1160 right on the freaking high. And some got out at 1090. And they're going to buy back again at 880. Okay? And we'll see how the 9.5 range holds. That's what the pro traders will do, and everything will have an intraday pull. Resume. All right, once again, SMF Pro Traders live in action. SMF Pro Traders out at 880 on the call. Sold into the strength from the overnight. Talking about the gap, how it has to pull back. We're about $2 almost off the size of that gap, almost 3. Okay, there's the bid, there's the ask. Is no print going on right now. 276,000 shares in the first 9 minutes is more volume than we've seen. I'll be updating this trade as we move forward. What I am going to tell you is that the NASDAQ 100 kind of slightly went into negative territory. So once again, we teach people, I've got pro traders that shorted the gap. They're going to be covering in here and coming out. The thing about it is, as you learn how to be a market maker at SMF on an intraday level, using our mathematical proprietary platform, I already know where this trades before the day starts. And I will show people, if they doubt it, they can bet me any kind of money that they want. I take all bets when it comes to my trading application as to the accuracy of it. And basically, this is the opening bell. We haven't even been open 10 minutes. This is what gaps do. It doesn't matter what stock. You're going to be taught how to take the other side of the public who buy that exuberance. They love to buy that because in their mind, my mathematical platform will pinpoint where they are and how they feel even. And later on, I'll have Brian Plain pull that up. Everyone signed their non-disclosure agreement. That's the opening gap sequence, how to short a gap. There's a mathematical formula. There's a delta mathematical formula on the open to the pullback. That's what market makers do. That's how they make their money. Once they can get the public to follow one direction or the other, that's their role. You've been given a gift.